Amazon just reported earnings and is down by over 5%. Today, we're going to break down Amazon's earnings and see why it's down and see, is this something that we should be concerned about, or is this an opportunity to buy the stock? It met revenue expectations, but that is not the impressive part. The impressive part is it made $187 billion, which is up 10% from last year. I mean, we thought 150 would be the cap for the next few years, but it even beat that expectations this year. And I can't believe I'm saying this, but it became 89% more profitable, ranking in 20 billion in profit this quarter. And on top of all that, it smashed analyst expectations for EPS. AWS is golden goose, somehow manages to lay more golden eggs every time. In one quarter made above $28 billion, which is 19% up from last year. Now, this is only one quarter numbers. It made over $100 billion in revenue this year, just their AWS business. And by the way, its growth has re-accelerated. It was growing 12% last year to today growing 19%. However, not everything is sunshines and rainbows. Its operating income almost doubled. It was 5.3 billion to today being 9.2 billion. I think this is mainly due to rapid expansions because of AI demand workloads. Now, Amazon just introduced ads on their Prime Video streaming service last year, and it's already making $17.3 billion in revenue. And by the way, this means Amazon's ad revenue is 40% of Netflix total revenue. If you were to do an apples to apple comparison, their ad revenue business for Amazon Prime is growing at 18%, where Netflix's business is only growing at 16%, and they have to push that business heavily and consistently increase prices. Now let's talk why the stock is down. Number one, they gave a conservative outlook for Q1 of 2025. But what's really making this stock plummet is the same thing what made Google stock plummet, is the fact that they're going to spend $100 billion on AWS and AI related products and services. And what do shareholders want? More than anything, stock buybacks. That means that $100 billion isn't going to stock buyback on investing in the future so they can stay competitive. Now, I'll be very honest, the market is being very short-term focused and not looking at the bigger picture. If Amazon wins this AI race, their revenues could 3 to 4x over the next 5 to 10 years. And that is worth spending $100 billion to win this race. Listen, buy Amazon because history is on their side. When Amazon had a 20% dip in 2014, if you bought the stock then, you'd be up by 10x today. If you bought the stock in 2022 when it had a 50% dip, you would be 2xing your position today, because back then Amazon market cap fell below $1 trillion. Today it's above $2 trillion, even with this 5% pullback. In the case of Amazon, dips are always a buying opportunity and something you would ultimately regret if you don't take advantage of it. Also, the biggest bombshell moment that happened in the earnings call is that AWS is officially offering DeepSeek as one of LLMs that people can use at a fraction of the cost to OpenAI and Claude. What's also so impressive is that they're staying competitive. They're investing another $4 billion into Claude so it can catch up to DeepSeek's pricing. Instead of not offering DeepSeek, they're offering DeepSeek, but also they're making initial investments so their own LLM can catch up to DeepSeek. That is integrity at its finest. And also they're developing their own AI chips to reduce costs so they're not heavily reliant on NVIDIA. Currently, they're extremely reliant on NVIDIA. They're going to change that with constant reinvestment into the AI hardware sector, which would ultimately reduce costs for its end clients and ultimately give Amazon higher margins because it's their own products, services, and hardware being offered to the end user, aka the customer. Don't worry, I did not forget about their logistics business. It has slowed down in growth dramatically, but it is still satisfying its customers. They announced in the earnings call more and more customers are extremely satisfied with the delivery times of their packages, and the delivery times are getting shorter every quarter. Also, they're able to utilize their Prime subscriber to sell them other products and services, which also have a high satisfaction rate. And they also announced their purchase purchasing new land, property, and other stuff to make sure the packages can get to their end customers faster and cheaper. But there is an explosion on their ad growth for top listings on Amazon.com. That means if you want your product to show up as the first list when someone searches something, just like Google.com, people are, which is driving up their ad revenue. Overall, this part of the segment is pretty boring. It has slow growth and it has high satisfaction. The real growth area is still in the AWS side and the AI sector. So what do some of the analysts think about this earnings call and the pullback? Well, Morgan Stanley said that this is overweight and you should wait for a pullback. But Wedbush calls this dip an extreme buying opportunity, and the forward PE with this pullback is 32, which is 20% earnings growth, which means yes, this is slightly overvalued. So here's my thoughts on it. I own $5,000 worth of Amazon stocks altogether between the investor fund and my personal 401k. I would happily add more to it if this thing falls below 200. Now 210 is very reasonable. I happen to agree with Morgan Stanley. I think you should wait for the pullback to hit below 210. At that point, it becomes an undervalued stock, and that's when you want to get in, so you have the highest upside. But a few dollars here and there aren't gonna have that much of an impact on your return over the long haul. I think if you plan on holding this stock for more than 5 years, go ahead and buy it now. Don't wait for it to fall another few dollars. It's not going to make that big of a difference. Think about this. By 2030, if this stock hits 700 or 710, what's the difference? If you buy it now, you're still getting a 2x return. If you let this dip slide without taking advantage of it, you're going to have regrets if you don't find an investment that has a higher return than Amazon. The only thing I didn't like about this earnings call, and it's not major, but it's something that it really bothers me, is that they didn't talk about their telehealth and pharmacy business. They were promoting the living hell out of those businesses not too long ago. Remember when they made Hims stock crash and it was all about telehealth? When they made the CVS stock crash at the start of the year because of Amazon Pharmacy? They didn't mention anything about healthcare. They just made a brief statement that this is one of their core missions. If those two sectors made such huge companies crash in stock price, why weren't they mentioning anything about this during the earnings call? But they had no problem talking about the UPS situation for almost 10 minutes and reassuring investors that they can handle the package delivery without UPS. That's the only concern I have, and it's not going to stop me from buying the stock, but it is something that I'm going to keep a close eye on for future earnings call. Anyways, guys, that's it for this video. Tell me what you guys think about this video. Did you like it? Did you hate it? What are some of the things you wish I would have covered more of? And do you want to see more videos like this or more videos of me doing stock analysis and projecting prices for stocks for the future?